Hi, my name is Xiaokai Fan, and I'm the Global Head of Central Banks and the Head of Asia Pacific ex-China at the World Gold Council.
And I'm Juan Carlos Artigas, Global Head of Research.
We're here today to talk about the Q2 2024 Gold Demand Trends Report, which was just released. And I think this quarter's report has some pretty interesting findings, wouldn't you say, JC?
Yeah, I definitely agree.
So I think probably the thing that stood out the most about gold in this quarter has been the price. Gold has performed very well. What do you think's been driving the strong price performance during this quarter?
Yeah, no, gold has reached multiple records during the quarter and actually traded about $2,300 an ounce for most of the quarter. Now, behind some of that movement definitely was demand. In particular, total demand increased by about 6% year on year in the second quarter, reaching about 1,250 tons, which is a record for a second quarter on our series going back to 2000. Now, in terms of the drivers, I would say number one, healthy central bank demand. Number two, strong OTC demand. But there was also a deceleration in outflows from physically backed gold ETFs.
On that ETF point, I think it's quite important because a lot of people have been looking at ETF data because it comes out quite frequently. What's been happening with the ETF landscape in gold, and has it changed much in Q2?
The first thing to note is that there were net outflows overall in the second quarter. However, that masks some regional differences. Number one, Asia continued to see inflows. And number two, Western flows or Western funds saw a deceleration of outflows. In particular, in Europe, we started to see actual inflows in both May and June, right? And in North America, there was a significant contraction in outflows. Overall, actually, trading volumes have remained fairly healthy throughout, indicating positive sentiment across the board in terms of activity and in the market. Now, perhaps what is also very interesting is that as we move into July, we have seen inflows across the board in all the regions.
So one big part of the GDT data for this quarter is the OTC market. Now, I know that this segment of the gold market often is the hardest to measure, but can you maybe give us a little bit of color as to what is the OTC market and why has it been such a big part of this quarter's data?
Yeah, so it's not as easy to attribute OTC demand in terms of the composition of it. However, we have a fair degree of confidence that this was coming from a combination of institutional investment, family offices, and high net worth individuals. Now, this has also been going on for quite some time. OTC demand has been strong basically from the beginning of last year. And now behind some of those movements have been a combination of factors, including heightened geopolitical risk, but also the need of diversification and the role that gold plays as a store of wealth over time, which actually, is not too dissimilar from what I understand of how central banks behave. So can you share some insights from that perspective?
It was actually quite a strong quarter for central banks in Q2 as well. They bought, I think, 184 tons on a net basis. Quite strong Q2, but when combined with Q1, it's actually the strongest first half net buying for central banks in our data series. Of course, this comes on the back of 2 years of exceptionally high purchases from central banks, over 1,000 tons both in 2022 and 2023. I think, why central banks have been so interested in gold were some of the factors you mentioned in your last answer about geopolitics, diversification, and a need for a store of value. We do an annual central bank survey, which we just released last month. And in that survey, actually, the sentiment for continued gold buying remains quite strong. 29% of survey respondents said that they have plans to add gold this year, which on the back of a high gold price and all this buying that's already happened, still reflects ongoing appetite for gold among central banks. I guess moving on from central banks, maybe let's drill down a little bit more to other parts of the gold market. The retail market is, of course, still a very big part of the gold market, and we've seen a bit of differentiation between different regions of the world in terms of how they've been buying gold at a retail level. Can you maybe shed a little bit more light on that, JC?
Yeah, so overall retail bar and coin demand dropped by about 5%. Again, just like ETFs, it masks some regional differences. In the US and Europe, we saw some profit taking. Trading activity was fairly healthy overall, which is interesting. But if we actually look at Asia, for example, Asian investors were more momentum seeking and being encouraged by the positive trend in the gold price.
And of course, another very big part of the gold market is the jewelry market. But that segment of gold is always a little bit more price sensitive. So have the high gold prices in Q2 had any impact on the jewelry market?
Yeah, that was a bit more significant, in particular for jewelry. There was a contraction of about 19% or so year on year. And indeed, as the gold price increased, that started to have an effect. One of the biggest drivers for that drop was actually China, which saw a contraction of more than a third in jewelry demand year on year for the second quarter. Which was a combination both of price but also disposable income. Now, in India, there was also a decrease, but perhaps not as much. Part of that is because, well, number one, yes, the price had created some headwinds, but it was mitigated by a stronger economic backdrop. And actually, there was an interesting recent development in India, because last week the Indian government announced a change to the way that gold is taxed, in particular by reducing the import duty on gold, which we actually believe is going to be quite supportive for Indian demand in the second half of the year.
That's a very important development, I think. So let's move on to the supply side of gold. Typically, when the gold price is high, we see maybe a little bit more recycling volume because people might want to take advantage of these higher prices. Has that happened this quarter? And maybe also talk briefly about what's happening with newly mined gold as well.
Yeah, so starting with mine production, it increased by about 3%, reaching a record for the second quarter based on initial data. Now, in terms of recycling also increased by about 4%. But there are some interesting points here. Number one, while it increased in the second quarter relative to the same period last year, it actually fell relative to Q1, in spite of the gold price increasing during the second quarter, as we discussed earlier. Now, what's behind this? Partly it can be explained by Indian recycling, because of the strong economic background or stronger economic background in India. We have not seen as many consumers ready to part ways with their gold jewelry. However, we have seen exchanging old jewelry for new or using gold as collateral for loans.
Quite an interesting development on top of, I think, a very interesting quarter, to be honest. It was a strong quarter for gold demand overall, with the backdrop of a high gold price. So to read the full gold demand trends report, go to www.goldhub.com, where you can find that report and all of our other research and data all in one place. Thank you.